All right, well, g'day there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. Today's date is Monday, the 28th of August, 2017. The reason for this video at this particular juncture is just to update you more so on the structure of the market, what it is doing, and what to expect moving forward. Now, over the past month or so, the markets collectively have been putting in a series of lower highs and also lower lows. However, this does not fit the fractal of that of the larger intermediate or macro trend. This is more so on the minor level. Let me just sort of explain to you, let me illustrate to you what it is exactly I am seeing, because it is very easy to spot and it does allow us some pretty straightforward structure to work with as we continue, or at least round out August and also move into September 2017. So if you pay attention to the NASDAQ, you can see that since establishing the all-time high towards the end of July, every time we have pulled back and rallied, it has produced a subsequent lower high. You can see this repeating pattern take place throughout really the majority of August 2017. Here we are, the first trading session of the week. We closed up 17.5 points more or less on the NASDAQ. However, the movement is all that inconsequential. We didn't really break above Thursday or Friday's candle, nor have we broken above this declining bearish trend line. So again, it is setting the framework of what to expect moving forward. Personally, I am under the assumption that this trend line is going to hold and that we are going to see a larger correction, more so of a deeper correction, which is going to take the NASDAQ down to 6,150. However, if we are to look at this and to at least identify that this is a downward sloping bearish trend line, we can say to ourselves that, look, if the markets close, or if at least the NASDAQ closes above roughly 6,328, we can expect the NASDAQ to rally all the way back up to about 6,450. Do I think this is going to happen? Personally, no, I don't. I think eventually it will, but before we get the breakout above this figure at 6,328, I assume that this bearish trend line is going to hold and we are going to see a deeper correction. The reason why I'm saying this is because the MACD itself, it still hasn't got that positive cross to the upside. Momentum is still net negative. And because of this, I believe the correction still isn't done. I mean, it can still, of course, break above this figure. But personally, again, I am expecting it to pull on back down to about 6,150. The same is true for the Dow Jones Industrial Average. Again, you can see that it peaked out not in the month of July, but it was a little bit later towards the beginning of August. Since then, once again, we've sold off, we've bounced, we've made another lower high, we've sold off, we've bounced, we've made another subsequent lower high. And here we are once again. On Friday last week, we were left with what we call a gravestone doji candlestick. This is a relatively bearish candle, and again, with that upper wick, it is of course obeying this downward sloping resistance line. Again, today we were down 5.5 points. You can see, of course, that we are a little bit bifurcated between, of course, the NASDAQ and the industrial average. But when I bring up those oscillating indicators again, you can see that the Stokes is trying to turn up. The RSI isn't overbought nor oversold. However, the MACD is still sloping to the downside and we are still printing into negative territory in terms of momentum. So again, we are in a form of a continued sideways consolidation. We aren't in any form of a sort of an intermediate or a macro sort of correction going on at the moment. This is just allowing those oscillators and also the ADX, which has been relatively elevated, to actually reset. So if you pay attention to the ADX, as soon as it turns down from these elevated levels, the market goes into a sideways moving period. You can see this over and over again over here as well. We go into a sideways, if not a larger type of pullback. That is the type of market environment that we are currently in. So I'm not expecting it to really break out immediately. I'm not really expecting this to get above some of these swing high points that we have been printing over the past 5 trading sessions. Obviously, the week just passed also, it was a rather sort of dull week. But again, that rough trigger point on the industrial average is sitting in just shy of 22,000. It's coming in at about 21,942. But again, I'm expecting this to pull on down to about 21,525. At those lower levels, of course, you will be offered a really nice risk and reward sort of profile to take advantage of that subsequent bounce, which I do believe is coming as well. Now, if we progress into the S&P 500, again, you can see we sort of topped out towards the beginning of August. We've sold off, we've bounced, we've produced another lower high, we've sold off, we've created another lower low, we've bounced, we've created another subsequent lower high. You can see the process collectively across the board for these three closely followed market indices. Again, we're pushing back up into this short-term bearish declining trend line. This is on the micro level. This is a very short-term trend line. It's not the strongest of trend lines, but once again, we're starting to stagnate, and it looks as though potentially we are going to see a sell-off take place in the S&P 500, which is going to bring price back down to old support prior to that, which was old resistance, sitting in here at about 2,400. That is roughly my target for the S&P 500 as well. There is the opportunity to trade long above roughly 2,460, but I'd be sitting that out. Instead, I would like to see these markets pull back. Now, again, this is sitting relatively well with our top 12 individual traders. You can see Apple. Apple is probably the strongest of our top 12 stocks at the moment, but the majority of these stocks, as this is happening, is pulling back into their respective support areas. So we can say that, look, structurally, the markets are sound and so are individual stocks as long as they continue to hold above either their rising exponential moving averages or into a lot of these support areas which we find ourselves pulling back on into. You can see that we're drilling into resistance on a lot of these stocks, but at the same time, if I quickly switch to those rising exponential moving averages, you can see that we're still holding, and if anything, we're just setting up again potentially a trampoline that a lot of these stocks are going to bounce off moving forward. Again, you've got Caterpillar on the precipice of a breakout, a major breakout to the upside, which is relatively exciting. You've got COP, which is drilling into support down here just above 42.50, coming in at about $43 a share. So that, although we haven't seen a major move to the upside, it is again drilling into support, very similar to what we saw on CVX during these months, April, May, June, and also July. Before we went parabolic after earnings, we're retesting and we're starting to bounce already. So a lot of these stocks are a little bit more sort of progressed compared to that of the larger market indices, but at the same time, they're giving us a lot of information as to what to expect moving forward. Google, again, drilling into macro support. As long as we hold above these levels, the market remains healthy. The same for Goldman Sachs. This is all macro support, which has been taking place over the past 5 or so months. As long as we hold above it, we're expecting Goldman Sachs, along with that positive divergence or bullish divergence, otherwise known as bullish divergence, to continue and to see higher prices. You can see IBM. This is the one stock in our list which is relatively bearish and has been for quite some time. We're starting to see the first initial signs of a dead cat bounce. You can see how all these oscillators are starting to turn up. We've got positive divergence, which has been forming really since May 2017 as well. So although we are anticipating higher prices for IBM, we're not anticipating the actual reversal of this relatively strong bearish trend which is taking place on IBM. You can also see Netflix pulling back into our green area, our green rectangular box of support. As I do that, Netflix has just crashed on me, funnily enough. So I might end the recording here. Same is true for Tesla, by the way, very similar type of picture to a couple of the stocks that I've previously looked at. But again, the markets are still structurally sound. They are still doing all okay. As long as they remain this way, you have to approach the market still relatively bullish. All right, so be back with you later in the week for another market update. That will do us as at the close on Monday. Be well, everyone right around the world. It's James signing off on behalf of Pivot Point Trading. All the best, everyone. Goodbye.